SWIFT, also called the Society for Worldwide Interbank Financial Telecommunications, is a messaging network used by financial organizations, such as banks and money brokers, to communicate with each other using predefined messages and instructions. Put simply, SWIFT works like a social network where the users are all financial institutions. Each user has a unique SWIFT ID, enabling them to securely send and receive information for their daily business, such as money transfers. This system allows the payee to transfer money to an account located in another bank in a different country. To uniquely identify a financial institution, SWIFT assigns each organization a unique code, which usually has either 8 or 11 characters. For an 11-character SWIFT code, the first 8 characters are the same as the 8-character SWIFT code, while the last 3 characters usually identify individual branches. In a classic 8-character SWIFT code, the first 4 characters are the institute code, identifying the financial institution. The next 2 characters indicate the country code, and the last 2 represent the location or city code. Let's take a look at an example of how the SWIFT system works during a transaction. Assume Alice wants to transfer $100 from her U.S. bank account to Bob's bank account in Australia. A simple scenario is if the 2 banks have a commercial account with each other, meaning they have an established relationship. In this case, Alice's bank will send a SWIFT message or payment instructions to Bob's bank within a few minutes. Alice's bank will then deduct $100 from her account, and Bob's bank will credit $100 to its commercial account. The final step is for Bob's bank to credit $100 to his personal account, minus any fees for the transfer. A more complex scenario is when both banks do not have a commercial bank account with each other. In this case, they need to find a third bank with which both have commercial accounts. This third bank acts as an intermediary to handle the transaction. The steps are as follows: Alice's bank deducts $100 from her personal account, notifies the intermediary bank to debit its commercial account by $100, and credits the commercial account of Bob's bank with the same amount. Bob's bank then credits the money to Bob's personal account. Since this scenario involves more steps, additional fees and processing time may be required compared to the simpler scenario. An even more complex scenario involves different currencies in the transaction. As in the previous example, extra time and fees may be required for currency exchange. Since SWIFT is owned by its members, a fixed income for SWIFT comes from members paying a one-time joining fee and annual charges. Additionally, each message sent on the SWIFT network incurs a small fee for the sender. Financial organizations are typically placed in different charge tiers based on the volume of messages they send in a year. Extra services provided by SWIFT, such as business intelligence, reference data, and compliance services, also generate revenue for the network. Thank you for watching. If you liked the video, please hit the like button or subscribe for more interesting topics.